Aloha, this is Digital Micro, and you're on the Digital Micro Trading Journal, Day Trading for ROI. This video is about hedge headline risk. This is a must in any trade plan. Let's define headline risk on 7 categories currently. Most media content on social platforms, on news, is about number 1, the tragedy of war. Number 2, post-pandemic world order. Number 3, inflation at 40-year highs. Number 4, we've got the Fed woefully behind the curve. Powell admitted to as much. Next is interest rates, especially on the 2- and 10-year Treasury at high elevated rates. And second to last, the equity markets, risk on, risk off price action. And the last, and not the least, VIX, a measure of volatility, closes above 30. So we bet at this elevated level for days. Last Friday's close again above 30 on the VIX. So what's working for me in 2022 is systemize how and when going to cash. It's really helping my P&L. Systemizing, better word maybe would be gamifying it. So, of course, you're going to measure your trade plan on entries, exits, risk, time horizon. Entries and exits are going to be journaled. But not a lot of people, I hear at least on the social platforms, when they talk about trading, have a system on the other side, which is defense, on when and how to go to cash. And again, it's the opposite of taking a trade, and you should be in cash frequently, and it should be for longer term. Examples, the weekend. Anybody that was unhedged and wasn't in cash, completely naked in a position over the weekend, why would you do that when we've got swirling headlines that are, again, very herky-jerky, risk on, risk off? Again, this is just my opinion and what's working for me, since 2022 is a very different market than what we've had in the last few years. Let's go to the benchmarks. So at the top, we've got the S&P 500 minus 2.9%. So nothing good in the green for people that were passively managed. We got down almost 3% on the Russell 2K, which I was very active in. The sole instrument I traded last week closed down 1% if you were passively invested. And Bitcoin really did some green, but not by much. So again, 40,000 continues to be a bit of resistance above. So let's check out the charts on the M2 so we know where we've got our bearings for Monday Globex open. So we have the M2K 24-hour chart, and this is completely relevant for the Monday Globex open for 3 areas. Number 1, the January year-to-date 2022 anchored VWAP was rejected again. The last time was 6 sessions ago. You can see how we had a decline, and then six sessions later we hit it, and this was mostly the Europe Globex traders that got caught long. And then once the RTH opened Friday, it was trend day down, all red, big wick. So the candle wick here shows us here, now we're in the yellow rectangle on the lower end. We've got a lot of areas of confluence, but number 2 is the February 24th anchored VWAP, and the reason I measure that candle is that was a huge save from a volume standpoint, one of the bigger green volume days, and I just want to see again how many traders are trapped on here depending on where price is, either above or below. And then the last area that I'm going to look for Monday is the lower Bollinger Bands. Wherever price is in the Europe, Globex, RTH, Asia, I want to know relative to the lower Bollinger Band, which is 1935. So again, the levels, we've got 2041 on the January anchored, the February 24th, about 1997, 1996 and change, and the lower is 1953. So that's wrapping up 3 zone areas that I'm going to measure against price action. On Monday, let's go to the 120 minute. So on the 120 minute, what stands out here is the upper Bollinger Band areas. So I've just taken in what happened on price consolidation before the Globex. These green candles here is all Europe Globex getting trapped right before the RTH opens. We had just a total trend down, red candle. So again, trends are only usually 35% of the time. So I'm looking to see price consolidation potentially on Monday Globex. The big point for me will be a 1997 to 2000 area. That's middle Bollinger. Upper Bollinger is 2026 and the lower is 1967. Again, a 120 minute is a good reference on a larger time frame along with the 24-hour. So appreciate you guys watching. Don't forget to consider Hedge. It's been working for me and monetizing more P&L based on measuring what matters, which is how often I'm in cash, how frequently, and when that happens. Take care. Until the next video. Aloha.